Hello everyone. Today I'd like to talk about a simple concept we use as financial advisors to help explain and generate a plan for our clients to achieve their financial success. This concept is the human capital plus financial capital concept. So when we talk about human capital, first off, we're talking about your ability to use your hands and your mind to create an income, and that might be through work or through labor. You then are using the income generated from the human capital side to be able to then buy a house, buy a car, put food on the table, and feed your family. But at the same time, most people don't utilize or spend all of their human capital generated income. They are then using that money to invest, and that's what we encourage clients to do, because the total wealth of a person is not just made up of your human capital. It is also your human capital plus your financial capital. And what happens is that over time, the money that you do not spend, that you put to the side as financial capital, gives you an ability to then invest it further to grow your wealth into the future, which is why we have a concept called retirement planning. Because when you reach retirement age, what you can see here is that your ability to use human capital to generate income decreases over time, and especially after retirement. But from that point onwards, your financial capital should take over, and you can see an inflection point here, whereby that financial capital grows over time, but then it reaches to say age 85, and for some reason it falls off. And this is a very interesting concept that most people don't understand, because they believe that when they retire, their capital should never move, and then they should just spend all their income each year. But the reality is that when you get to a certain age, let's say over 90, you are at least drawing 11% per annum out of your tax-free pension. And if that is the case, it is very difficult, especially in the current environment where cash rates are almost zero globally and term deposits in Australia are paying somewhere between 0.5 and 0.6%, for you to actually be able to generate a return net of all fees of 11% per annum on a consistent basis without taking excessive levels of risk. So that's all for today, and if you have any further questions, please reach out to your advisors at the SWU group, and don't forget, if you like the video, give it a thumbs up, and remember to subscribe down the bottom so you get updates to our latest videos.